Just take a moment, look at the disclaimer. This content is for educational, informational, entertainment purposes only, and nothing should be a recommendation to buy, sell, or hold any securities at any time. We're here just to tell you how we look at the market, how we analyze the market. This is Rod from BTA, and we are known as the Middle Traders. Okay, we're doing the end-of-day update for June the 29th, 2022. Okay, Wednesday, June the 29th, 2022. And this is not going to take long. We're going to look at the weekly charts. We just did part one. We looked at the daily charts, and we looked at the daily chart of the actual indexes themselves. We're going to look at now the weekly charts for the ETF that tracks the major market index ETFs, the ETF that tracks, the ETFs that tracks the major market indexes. Okay, so let's look at the DIA. This is a weekly chart of DIA. As you know, this tracks the Dow Jones Industrial Average. Okay, look, we closed right above. Better above than below, that's for sure. Right above the 4-week, this white line here, the 4-week moving average, okay? But we got rejected right at the 8-week moving average. You see this green line here, this downward trending 8-week moving average? We traded up to it this week and got rejected. And today, we closed right on this downward trending 4-week moving average. So we got downward trending 4-week, and we got downward trending 8-week moving average, the green line. We traded up to it this week, okay, up to the green line, but it got rejected. And as of right now, we closing at the lower end of the weekly range so far. We got tomorrow and Friday, Thursday and Friday, only thing left for this week, okay? But we're testing this downward trending, okay, this downward trending 4-week moving average. That's not good, okay? Let's go to the structural chart real fast. Let's go to the structural chart real fast, okay? All right, this is the structural chart for the DIA, okay? A weekly chart, structural chart for the DIA. And as you can see, we are below this trend line, this upward trending trend line coming from the March 2020 lows across this fractal right here. This trend line coming all the way back from the March 2020 lows, okay, coming up across this fractal right here. You see what happened today? Today we closed below it, okay? We still closed below it. This is a weekly bar. This is a weekly chart, but today we didn't get above it. We closed below it again today. So we below this upward trending trend line from the March 2020 lows. Look, right here, this red line here is 306.28. The one right below it is 304.66. We closed today, right here, we closed today at 310. So 306.28 is the level on the DIA. We break below 306.28 and then get below 304.66. It's a strong possibility. It's a strong possibility we could come back down to this low right here. It's this previous low, this big, thick red line right here. You see that big, thick red line? Do you see that big, thick red line? That's at 295.87. That's going back to the March 2020 highs, okay? If we break below 306 and then get below 304, I would not be surprised if we don't come back and test that level, all right? I would not be surprised if we don't come back and test that level. And that level, like I said, is the March 2020 highs right here, okay? The March 2020 highs before the corona collapse. Right now, we're not there yet, okay? But we are closing below this upward trending trend line coming from the March 2020 lows. And look, we only $4 away from the 306, the first support level. We only $4 away from the 306, okay? So we got to be careful, all right? We have to be careful. But that's the DIA. So that's the levels we got to watch on the DIA, okay? Right now, we got to see if we get back above this upward trending trend line coming from the March 2020 lows. We got to see if we get back above that. And then we got to hopefully, if we don't, and it start trading down, we can hold 306.28 first and then 304.66 next. We break below these two support levels, it can be a problem. Okay, that could be a problem. Let's look at the SPY real quick. Okay, that was the DIA. So now let's look at the SPY. Look, we spoke about this a few minutes ago, okay? We at a key level on the SPY, all right? It's at 380.54. Okay, 380.54. We just identified that on the daily chart, the same level. And we talked about the actual Standard & Poor's 500, the index itself, is finding support at the 3,800 level, a big round number. Right now, you see this weekly support level right here. Okay, this weekly long-term support level is at 380.54. We closed at 380.34, just below it. Okay, just below it. If we can't get back above that tomorrow and it gets rejected and it continues to close below 380.54, I don't see no reason why we couldn't come down to this 371 level, 88. That'll be my next area of interest. But right now, 380.54 on the structural chart is where we have to be careful. We have to hold this level for the Standard & Poor's, this SPY ETF, the ETF that tracks the Standard & Poor's 500. The 3,800 level for the actual index itself. Be careful, all right? Be careful. We are at key support levels right now. Let's look at the key moving averages for the Standard & Poor's, the weekly chart here, for the S&P, the SPY, the ETF that tracks the Standard & Poor's 500, S&P 500. Well, what is happening right now? You see it. Today, we closed below this downward trending 4-week moving average, and we still below this downward trending 8-week moving average. And what did we do this week? If you notice this week, we closed the high point of this week. We opened right at the 8-week moving average. We tested the 8-week, this green line, the 8-week moving average, and it got rejected at the 8-week moving average, okay? So right almost to the penny, all right? How many times do y'all have to hear me say almost to the penny? You see this thing is right at the 8-week moving average? You see it? Right at the 8-week moving average. The high, it got rejected. The high of this weekly bar is dead smack almost to the penny on the 8-week moving average. Now we closing below, today we closing below the 4-week moving average, this white line. We only got 2 more days of trading for this week, and then this weekly bar will be complete. If we can't get back above this downward trending 4-week moving average, something is wrong. If we break this here 150-week moving average, well, that can be a problem. That can be a problem. We broke it once, we got below it for the 2 weeks here, and we got back above it. If we keep trying to break below this and we stay below it, well, the 200-week moving average might be next. All right, so we got to be careful. Look, we got to get back above this downward trending 8-week moving average, and we got to get back above this downward trending 4-week moving average. It's simple. And we got to get above and stay above that 380.54 level on the structural chart. It's simple for the SPY. This is a weekly analysis. Look, it's simple. Don't get caught. This is not financial advice. But wouldn't it be wonderful if it was? Wouldn't it be great if it was? But it's not. Don't get caught. That's all I'm saying. I'm telling you what we're doing. The weekly chart is telling you you got levels you got to be careful of. Let's look at the QQQs real quick. Look at the Qs. Look at the Qs. Okay? Look at the Qs. It doesn't look good on the weekly chart. All right? Today, you still close below a downward trending 4-week moving average. You're still below a downward trending 8-week moving average. And you're below the 150-week moving average on the Qs. This thing is not in a good position. I would not be surprised if the Qs don't trade down and start testing these lows right here. I would not be surprised if the Qs don't come down and start testing these lows. It may even come all the way to the 200-week moving average at 264. I would not be shocked. Look, if we can't get back above this downward trending 4-week and this downward trending 8-week moving average, we start breaking below these structural levels, I might have to take a nibble. I might have to take a nibble to the short side because this is clear. The momentum is to the downside right now. Okay, it's not looking good on this weekly chart. Well, this is the level I'm looking for on this weekly chart, and then I might be interested in going a little short. Okay, we have to see. But here's the level right here on the weekly chart. We talked about it already. The 280.21 level. We talked about it in the first part of this when we did our daily analysis looking at the daily charts. 280.21 for the Qs, the QQQ. Look how this week's bar stopped dang near to the penny and got and bounced off of it, but we still closing on the lower end of the range for this weekly bar. And we below this upward trending trend lines here, okay, going all the way back to the March 2020 lows, coming across these fractals. Okay, we're below it. So we're below these uptrending trend lines. We closed it below it so far this week. Only 2 more days left trading days in this week, Thursday, tomorrow, and Friday after that. And we tested this 280.21 level, and we bounced off it. If we break below it and close below it, okay, it might be an issue, especially if on the Qs we now getting below that 11,000 level, that big round number for the actual NASDAQ itself. The actual NASDAQ itself, the 11,000 level. Okay, we got to be careful. All right, we got to be careful. The only thing about the Qs that has me a little concerned with the Qs, if I go to our market sentiment page, all right, you can see here that the FANG MTs, these big mega cap stocks, the FANG MTs, they make up over 50% of the Qs. Okay, they make up over 50% of the Qs because the market capitalization, all right, they make up a lot. Those are the big companies. They make up the majority of the Qs, okay? And as you can see right now, they are trying to hold up today, okay? They closed up 1% and 2%. Most of them. Tesla was down 1%, but Google was barely down, only down 0.2%. Netflix was only down 0.6%. But Facebook, Meta, Amazon, Microsoft, Apple, all closed up over 1% and 2%. So if they don't collapse, I told you before, if the FANG MTs can't rally, I don't see how the indexes are going to rally. Well, if the FANG MTs don't collapse any further and they hold up, I don't see how the QQQs, because the QQQs track the NASDAQ 100 specifically. I hope you are picking up what I'm dropping right now. Are you picking up the jewels that I'm dropping? Pay attention. Ding, ding. Bell going off. Pay attention to what I'm telling you. The FANG MTs, if they are holding up, it's going to be hard for the Qs to collapse any further. Remember, I told you that. Right now, the QQQs is at 280.21 is a support level. We closed almost to the penny this week, okay? Today, we closed at 283.80. The support level is 280.21. For the actual NASDAQ itself, that round number of 11,000 is support. Be careful. If it break those, I'm probably going to be taking a little nibble to the short side. All right, I'll take a small position, add to it as it goes down. Or if it goes against me, I took a small position in the beginning, I'll go ahead and close it out for a small loss. Point blank and period. But these levels are starting to look very interesting. Let's go now to the, but look, let's just go back to this chart one more time. Please don't underestimate this. All this overhead resistance, this downward trending 4-week moving average, we close below it on the Qs. This downward trending 8-week moving average, we close below it on the Qs. 150-week moving average, we still below it on the Qs. Please don't underestimate all of this overhead resistance, that if the Qs start moving up, it has a lot to get through. Please don't underestimate this overhead resistance. You've seen it work and you've seen it in action before. You've seen it a couple of weeks ago when we consolidated and we could not get above this downward trending 8-week moving average. You've seen it in action before. It happened before, it can happen again. Let's take a look at the IWM. Okay, look at that IWM. All right, you see the structural chart right here. Closing below a downward trending 4-week moving average. Closing below a downward trending 8-week moving average, the green line. It's well below the 150-week, and it's below this brown line here, which is the 200-week moving average. Look, the momentum is clearly to the downside for the IWM. Until we get back above the 200-week moving average and this downward trending 4-week and downward trending 8-week, it's nothing to talk about. You got to get above this downward trending white line, the 4-week. You got to get above this downward trending 8-week moving average. and you got to get back above the 200-week moving average. You close it below that. My goodness. Why would I be long this? It's nothing to talk about. Doesn't mean I have to be shorted. It just means I might be sitting on the sideline. Like I told you, this is not financial advice, but wouldn't it be wonderful if it was? And if it was, but it's not, but if it was, you wouldn't lose a lot of money. You wouldn't lose a lot of money. I might not be shorting this stock right now, this ETF, trying to make money, but I sure enough is not going to be long it trying to make any money to the upside. It's too much overhead resistance, okay? Point blank and period. Let's look at the structural chart for the IWM. Well, you see that big, thick red line right there? Do you see that big, thick red line right there? Do you see that? The March 2020 highs at 169.14. We traded down to it this week already with this weekly bar, almost to the penny, and it bounced. Okay, but we still below this upward trending trend line coming all the way back from the March 2020 highs. If we can't get above that upward trending trend line, and we break below that March 2020 highs, well, I don't know how low it can go. I don't know how low it could go, but you see the problem to the upside. You got to stay above this here support level, and you got to get above this upward trending trend line coming from the March 2020 lows. That's the IWM. Be careful. Point blank and period. This is not a time to try to be courageous. Look, I'm not saying I'm trying to make money on the short side. I'm only short one thing right now, the ITOT, the ETF that tracks the total U.S. market. It only moves $2 or $3 in a day. So even if it goes against me, I can't get hurt but so much. And I only have a small position in it. Until it really flushes out, then I will go and add to it. Let's look at the ITOT right now. Look at the structural chart for the ITOT. It's right below this 84.59 level. It's right below this 84.59 level. That's support. If it doesn't get back below that and it can't get back above this upward trending trend line, okay, then the next level would probably be, I would not be surprised if it doesn't come back down here and test the 80.63 level. I would not be surprised if it doesn't do that. But that's the next fractal right here, the 80.63 level, right? I would not be surprised. But to the upside, it got to get back above this weekly overhead resistance area right here at this fractal at 84.59. We closed at 84.47. And then the next level is overhead resistance right here. The next fractal level at overhead resistance on this weekly chart is 86.05. So if I go from 84 and I break above 84, then I break above 86, and I break above this upward trending trend line, well then this chart is it's starting to move to the upside. I have to close a position. No doubt about it. But it only moves $2 or $3 in a day. Okay? So, but I'm short the overall market right now. I'm still short the overall market right now. We got a follow through day. So you know I can't be short really on a follow through day because that's our cue to start buying leading stocks and leading industry groups breaking out of sound base patterns. But the ITOT is in a very peculiar situation. Look at the key moving averages. Look at the downward trending 4-week moving average. Look at the downward trending 8-week moving average. The high of this week is almost to the penny of a downward trending 8-week moving average, and we closed below the 150-week moving average today. It's still below the 150-week moving average. So the momentum, our indicators, our key moving average, are telling us the momentum is still to the downside on the ITOT. Okay, so you see it. The momentum is clearly to the downside. The moving average, our structural charts, our key moving averages, our structural charts, all of it is telling us that these stocks, these ETFs are trying to basically want to go down. Okay, we got to see if they can hold support. The on-balance volume and the volume is just, the on-balance volume line is pointing straight down on all of them, pretty much. You see the ITOT is pointing straight down. Okay, the on-balance volume line is pointing straight down. If we look at the DIA, the on-balance volume line is still trending down. It's trying to turn just a little bit, okay? You can see that. On-balance volume line is still trending down. It's trying to flatten out just a little bit, but it's still trending down, okay? If you look at the SPY, look at the on-balance volume line for the SPY. It's still pointing straight down on the weekly chart. It's still pointing straight down on the weekly chart. Okay, so the on-balance volume is telling you it's not a lot of volume coming in right now. The on-balance volume is telling you that. Look at the Qs, okay? The Qs on this weekly chart, the on-balance volume line is pointing straight down. Okay, you can see that. On-balance volume line is pointing down. IWM, the last one, let's look at the IWM. Same thing. Look at the on-balance volume line. The volume is not really trying to come in. So you have to be careful. All right, that's it. We looked at, this is part 2. We're looking at the weekly charts. You can see we got some key weekly levels. Some key weekly levels for these indexes. The ETF that tracks these indexes. Be careful. If we can't hold the support on these key weekly levels, if we can't get above these key weekly moving averages, be careful. Okay? Be careful. I'm not saying short anything. I'm not saying do anything. I'm not giving financial advice. But it would be wonderful if it was, wouldn't it? I'm telling you what I'm doing. And I'm telling you it's dangerous right now if you're trying to be on the long side. This market has not proved itself. The follow-through day has not proven itself. It's not behaving well. See you in the next video.